Hello, everyone. My name is Ty Kiesel, and I'm the Director of Content at NAV. And today we are going to talk about the pros and cons of a merchant cash advance. This is an important topic because a lot of small business owners over the last, 10 or 12 years have either been offered or taken a merchant cash advance, and there's definitely some pros and definitely some cons that we should talk about. But first, let's talk about what is a merchant cash advance. A merchant cash advance is not a loan. It's a cash advance based on the volume of your credit card receipts. Like a loan, you're going to receive all the funds in a lump sum that you're going to repay with some kind of a percentage of your credit card sales. Now, there is a cousin to the merchant cash advance called a business cash advance that doesn't look at your credit card receipts, but looks at the cash available in your business bank account. Generally speaking, they're very similar, but today we're going to talk specifically about the merchant cash advance. So let's dive into the pros. Generally speaking, it's very quick funding. Usually you can talk to somebody today, and before the end of the day, you're going to have an advance that would then be deposited into your business checking account within 24 hours. Sometimes they're actually able to get an answer to you, pardon me, in as little as a few minutes. But it's very quick compared to a loan at the bank. It's incredibly fast. And another potential pro is that it does not require a strong credit profile. If you have a credit score, depending upon the advance provider, in the 500s even, you can get a merchant cash advance. Basically, what they're doing is they're going to lend you based upon the credit card receipts in your merchant account, what they are on a monthly basis, and then they're going to direct debit every day from that account. So even if you have less than perfect credit, you can get a merchant cash advance. However, we're going to talk about the cons in a minute, so hang on. They're also flexible. You generally have the freedom to use the advance any way you want. It's not tied specifically to a use case like maybe an equipment loan would be. So this is although it's been around for several years, it's a relatively new type of business financing. Some of the places where an MCA could be useful to your business is if you need to respond quickly to an opportunity and you may not have enough time to go through the whole process of a traditional loan. A lot of businesses have been very successful using this for temporary cash flow help. It's not where I would recommend that you get a merchant cash advance because it's very expensive financing, but it does help. Where a merchant cash advance, I think, could be the best benefit to your business is if you have a defined ROI in mind for the loan purpose. Like, say, for example, you're buying inventory that you're going to be able to turn around quickly. You can then fold in the costs of the merchant cash advance to determine whether or not you can still purchase this inventory, like, for example, at a discount. I grew up in a small business with my dad. We had a supply business, and several times a year, different suppliers would reach out to us and let us know that they had inventory that we regularly purchased, that if we bought in a larger quantity, we could get it at a steep discount, which we could then either capture that as additional profit, or we could pass that discount on to our customers. If you were going to get a merchant cash advance for something like that, you could fold that into the purchase cost of the inventory and could tell whether or not it was going to negatively or positively impact ROI. Unplanned expenses are another good way to use this type of financing. And it's very possible that if you have a balloon payment or something like that, you could use a merchant cash advance to pay that off. So there are legitimate scenarios where a merchant cash advance could make sense for your business. Let's talk about the cons. Merchant cash advance is very, very expensive. You should expect to pay double digits to often triple digits in an APR because it's just super expensive. And they don't express costs in APR. They're going to express it in what's called a factor rate, which could make it harder for you to determine what the costs are. So you need to be very aware of what the costs are, and make sure that you're not going to be injuring your business by taking this type of financing, and that it's not a catch-all type of financing, but there is a defined use case because it's so expensive. Typically, a merchant cash advance is going to require a daily direct debit from your business bank account or your merchant account. This is going to take place every day, with the exception of the weekends, depending, of course, upon the lender. But typically, it's weekdays when you're doing business. There will be a daily debit pulled out. You want to make sure that your cash flow will support that. If your cash flow is typically tied to large deposits at the end of the month, this might not be the best type of financing to get. If I were looking at a merchant cash advance, I would want to make sure that I had a steady stream of cash flow all through the month so that I could service the daily debits. Because this is not a small business loan, but a cash advance, this won't help you build business credit. So they don't report to the business credit bureaus, and it's not going to help you. It's not going to help you build business credit. Another thing to consider is some merchant cash advance providers are going to lock you into a particular merchant processor that they work with. That's not the case for all of them, but it's a possibility. So you need to be asking those questions and making sure that you like the processor that they want to use, or maybe you need to look at other options. Also, in order for a merchant cash advance to work, you need to take credit cards. If you don't take credit cards, a merchant cash advance is not for you. Maybe a business cash advance would be a better option. However, they both work the same way. Now, one thing to consider, that as you're looking at a merchant cash advance, because the barrier to entry is so low, you need to recognize that there is a distinct correlation between how easy it is to qualify for financing and how much it costs. For example, a traditional bank loan is typically difficult to qualify for, but the interest rates are extremely low, so your costs are lower. A merchant cash advance is much easier to qualify for. The credit score requirement is much less. However, like we've already talked about, you should expect high double, triple digit interest rates. So how do you get a merchant cash advance? If you have solid credit card sales, and your credit score is, not horrible, you will likely qualify. Now, some providers will go as low as into the 500s. Others are going to want to see a credit score of 600. So there is quite a range, but recognize that the lower your credit score, likely the more expensive the merchant cash advance is going to be. Typically speaking, when we say solid credit card sales, there are providers that if you have $5,000 a month in credit cards, you'll be able to qualify. So you want to probably shop around a little bit if you're looking for a merchant cash advance, and make sure you understand exactly what the terms are. And most of the merchant cash advance providers are going to offer an online application. it's going to be really easy to fill out, and they're going to be able to get you an answer very quickly. Now, there are some things you need to know about the repayment structure, the terms, and the vocabulary of a merchant cash advance. A merchant cash advance is not expressed in APR. It's usually expressed in what's called a factor rate. For example, if you're quoted a factor rate of 1.5, in the example on our page here, that means that for every dollar you borrow, you're going to pay back 50 cents or 50 cents on the dollar. If the factor rate was 1.20, you're going to pay back 20 cents for every dollar you borrow. So you need to be very aware of what the factor rate is and what the overall cost is. So let's say you're paying, you're going to borrow $10,000 at a 1.5 factor rate. That means at the end you will have paid a total of $15,000 in repayment. So that $10,000 MCA cost you $15,000 or $5,000 to in interest costs. So you need to be aware of that. Another thing you need to be aware of is what's called the holdback. This is not the percentage of the advance that you're going to repay. This is a percentage of your credit card transactions that are debited from your merchant account every single day. It could be 10%, it could be 20%. This is not regulated. So this is a question you need to ask and make sure you understand the answer to of any merchant cash advance provider that you're looking at, because this is where it could impact your daily cash flow. Now, the good news, the good part of this is if you have a real good day and you have a lot of credit card sales that day, they will debit that 10 or 20% or whatever that holdback is will be greater than on those days when credit card sales are a little softer. So on the days that you're not doing as well as the days as other days, you will not pay as much in the daily holdback. But that factor rate of 1.5 will still apply. You're still going to pay 50 cents for every dollar you borrow. So does it make sense for you to get a merchant cash advance? There are some questions you should ask yourself. Do you have significant credit card volume to make it worth going through the process? Because that's what this is all dependent upon. Do you need to fund a short-term opportunity to generate ROI, like maybe buying inventory at a discount? And do the potential gains from the funds outweigh the costs? And this is where, I'm convinced that you don't necessarily need to be a financing expert to get financing for your business, but you do need to understand products like this in order to determine whether or not it makes sense for you. If you can get the merchant cash advance, if you have the means to make repayment and it doesn't negatively impact ROI, this could be an option for you. And it's important that you ask those questions, and that, like, for example, I can't recommend that you get a merchant cash advance to make payroll, for instance, because it costs so much. It's going to increase the cost of your payroll by whatever that factor rate is. So you want to make sure when you get a merchant cash advance that it is for a use case that will allow you to leverage that as a tool to make additional income for your business. At least that's my 2 cents. So how do you get started? You can go to Nav and fill out a profile, and you'll get matched to a number of different financing options. If your credit is less than perfect, one of those options will likely be either a merchant cash advance or a business cash advance. Make sure you ask questions that are going to help you understand what the costs are. And if you apply for a merchant cash advance, be prepared for the costs associated with that money. It is going to be much more expensive than a small business loan. And if they're available to you, make sure you look at less expensive financing matches in NAV as your business grows. Sometimes, we live in a world where the prevailing thought is that that more money is the answer to every small business problem. And that isn't necessarily the true. That is not necessarily true. You want to be careful and make sure that the money you're borrowing fits the loan purpose and isn't going to cost you more than that loan purpose would support. So I hope this has been valuable. A merchant cash advance is used by thousands of businesses every month to great success. But it also hurts a lot of businesses that aren't prepared and aren't thinking about some of these things we've discussed today. So hopefully this has been good information for you. Please feel free to reach out to us if you have any questions. And if you go to nav.com and fill out a NAV profile, we'll help match you to the type of financing that best makes sense for your business. Thank you very much.